Hello everybody and welcome back to Last Week on Wall Street, the show where I break down some of the biggest stories from the world of finance. I was thrilled to see the reaction to last week's video. It seems like you guys really liked our topic discussing the Activision Blizzard merger. So thank you to everyone who tuned in for that, but I promise you this week is going to be even better. So with that said, let's hop into the biggest stories from last week on Wall Street. All right, I hope you are buckled up because we have quite a bit to talk about. There was a lot of movement in the market last week with the Bank of Japan and some inflation numbers. We also had Trump make some pretty big claims about what he wants to do with interest rates and the Federal Reserve. We also have a fellow colleague that we need to celebrate, so shout out to Justin Best. And finally, this is breaking news as of today. We have some changes coming to Starbucks, which was inspired by a lot of the activist investors. So jumping into the first thing, the crazy week that we had in the stock market. So you see here, this feels like a lifetime ago. It was August 2nd. It's August 13th when I'm filming this. But on August 2nd, labor market data was very disappointing. The unemployment rate was 4.3%. June, it was 4.1%. And this was higher than their expectations of 4.1%. So the unemployment rate came in higher than expected. Non-farm payrolls were 114,000 versus expectations of 176,000. So this week data sparked a lot of fears regarding the health of the US economy, sparking a pretty major sell-off in US stocks. However, one point is not a trend, a view reinforced by many banks, including Morgan Stanley and Bank of America, keeping a soft landing in view. We've certainly seen this plenty of times before. We haven't let one positive data point completely influence the market, and on the same idea, we're not going to let one negative data point influence the market. So this was a bit of a temporary rattle, though. We also had a Hurricane Beryl here in the US. The actual effects on the market are pretty limited, though. The companies that would have been affected wouldn't drastically change the S&P 500 or anything like that. And now people are saying the reasoning behind this increase in the unemployment is not because of layoffs. In this case, it's because more people are entering the labor force, so more people are looking for jobs. If you are wicked smart and you know how fractions work, there's the numerator and the denominator, and with more people looking for jobs who are now unemployed, it makes the numerator a little bit larger, which results in a higher unemployment rate. So that's what people are claiming is what caused this. So overall, the S&P 500 was unchanged for the week, but this is the major news. The Japanese yen and what that did to the markets on Monday of last week. The Bank of Japan on July 31st raised interest rates to 0.25% in a surprising move that markets were not expecting. The governor expressed he would continue to raise rates in Japan to strengthen the yen. This was a huge surprise to markets due to the carry trade, which is short, low yielding currency, and using it to long, high yielding currency. So I can't explain this as well as most people, but the way that works is because the rates were so low for the yen, people would short that and use it to then leverage up and get equities in other markets where inflation or the rates were better. So that's what a lot of investors were doing, especially in Japan, leveraging the Bank of Japan. But please do your own research to this. I'm not doing the best job explaining this candidly. But with Japan raising the rates in the economic scare in the US, implying the Fed would cut faster, it caused a huge unwind in stock. So because this was going on, a lot of people were anticipating a 50 basis point rate cut by the Fed. We still are waiting to see what happens, but it was a pretty major panic. Monday was an interesting day here in New York. A lot of people sold their assets in US stocks that were funded by the carry trade to buy back the rising Japanese yen. This is what then led to the sell-off. But in terms of the longer term view, markets rebounded. We had a few really strong days, then we had a negative day, and then we kind of just ended up even on the week. So pretty anticlimactic. In terms of when you look and zoom out on the price changes for the stocks, but a pretty volatile week in the market. And of course, the weakness in the labor market is much more concerning if that continues to develop. Now, moving into a little bit of a lighter story, let's talk about Justin Best. He is a junior investment banker that won the gold medal in men's rowing. This was the four-man rowing in the Paris Olympics. So shout out to Justin. He is an investment banker at Union Square Advisors on the West Coast here in the US. He works in San Francisco. it's just amazing. He obviously has a demanding job, but most likely a even more demanding athletic schedule. I had in my notes that he woke up at 5:30, or at least would start working out at 5:30, do that until 8:30, and then take the train into the office at 9:30, come home from the office, and go and have a second rowing session later in the evening. So he was doing 2-a-days as well as grinding away in the office. So shout out to Justin. He definitely knows a thing or two about discipline. And of course, this story has resonated widely, inspiring not only colleagues in the financial sector, but also athletes and professionals across various fields. It shows that with dedication, it is possible to reach the highest levels in both your career and personal passions. Just as many professionals strive to balance work with personal hobbies or side projects, this junior banker's success illustrates the power of perseverance and strategic time allocation. Best mentioned, the keys to maintaining that lifestyle were communication with his bosses, organization of his work and self, and practicing efficiency skills. Best also got engaged this last week. I saw that on the Today Show. So needless to say, he had a pretty fantastic week, and yeah, hopefully he can get a promotion sometime soon. Now, moving into another interesting story, we have Trump and the U.S. interest rates. So this last week, Donald Trump suggested that U.S. presidents should have a say in setting interest rates, a role that has traditionally been reserved for the independent Federal Reserve. We all know just how influential Jerome Powell has been on the markets over the last several years. We literally just talked about it in the last few slides. But in this statement, Trump reiterated his long-standing criticism of Jerome Powell, claiming that Trump could make better decisions on interest rates based on his business experience. I think there is some validity in this because Trump was in real estate. He would understand, just how impactful rates can be on businesses. But again, I think Jerome Powell probably is still more qualified. For myself personally, I've never found interest rates to be that compelling. And so I think Trump would probably be better spent letting Jerome handle this. I think he's done a relatively good job, but I guess we'll see the long-term effects of it. But regardless, Trump's remarks have sparked concerns about potential interference with the Federal Reserve's independence, which is crucial for managing inflation and ensuring economic stability without political bias. So the Federal Reserve is supposed to be an independent entity. I'm not totally familiar with how it works in terms of who is nominated for it, but they are responsible for managing inflation, and that has been a major topic during, of course, the election now between Kamala and Trump. The inflation rates during the Trump presidency and the inflation rates we're seeing now, it's a major conversation, and people have criticized Powell, people have praised him, so it's really hard to tell who's right. I think, like a lot of the times, the answer is probably somewhere in the middle. It's easy to blame somebody, but we also could be in a totally worse situation now if it wasn't for him. So I don't know what my thoughts are on this. I'm just glad that it is not me in that job. But Trump's comments have raised questions about what might happen if he were reelected, particularly regarding the future of the Fed's leadership and his policy decisions. So just like so many other things we've talked about today, we're just going to have to wait and see. Now, finally, going into the final story of today, this was some breaking news. I saw it on CNBC when I was in the elevator heading up to the office today. And that is what's going on with Starbucks. Their shares were down nearly 20% before the CEO announcement so far today. They were facing pressures from activist investors to make changes. Elliott Management and Starboard were both making some pretty hefty demands in terms of restructuring their board of directors, as well as just a few other managerial things. So in response to that pressure, Starbucks swapped out their CEO. They appointed Brian Niccol as its chairman and CEO effective September 9th. Niccol is currently the CEO of Chipotle. He has done a fantastic job with Chipotle. Niccol will, of course, replace the current CEO who was initially picked by Howard Schultz. He was supposed to be the next generation. This was happening in 2023, but clearly that didn't come to fruition. In terms of the future outlook, like I said, Chipotle was crushing it under Niccol. Chipotle sales doubled from 2018 to 2023 with Niccol as the CEO. And because of this announcement, Starbucks shares have increased 25% already post-announcement. And because Chipotle's CEO was leaving, their shares have now dropped 7%. So pretty crazy to see all of this going on in the consumer restaurant space. I'm a big fan of both Starbucks and Chipotle. Hopefully this change isn't too drastic for Chipotle. they've done a great job for me over the years, but I agree. I think Starbucks can improve. But yeah, just a crazy time to see how companies are able to adapt very quickly to activist demands. But with that said, thank you so much for watching this last week on Wall Street. As always, if you have any questions at all, feel free to reach out to me on LinkedIn, and I'll see you in the next video. Peace.